What's going on, everybody? My name is Zach Hartley, and in this video I'm going to give you a full breakdown and recap of a trade that I just exited yesterday. I'm going to explain to you why I got into the stock, why I was interested in it, what was my technical analysis, what was my mindset, and what was the end result. So if you get any value out of this video, remember to click that like and subscribe button. Hopefully you learned something. Let's jump right in. Okay, so here was the trade. It was on Google or Alphabet stock. I still call it Google. I know they changed their name to Alphabet, but in my head they're still Google. It was on March 3rd that I entered the position. I actually posted it into my Discord chat. That's where I do all of my analysis. I basically share my watch list. I keep track of all my analysis, and that's where I also post all of my trades. And so I said I've taken a swing trade in Google, entry just below $94, take profit at 106, stop loss at 88. Important numbers. We're going to touch on those in just 1 minute. I also said that the stop loss is just below the latest level of support that was established, and the take profit is just before the next level of resistance. If the trade goes well, I plan to convert it to a trailing stop loss and let it run. $6 maximum loss per share on the downside. So that was super important. That was my risk here. So $6 maximum loss per share times the number of shares that I decided to buy. That is how much I was risking in this trade. Now, the reason I set it at $6 was because that was just below the next key level of support. I said that right here. So stop loss is just below the latest level of support. So I want to go and put my stop loss below that level of support so that if the price breaks below that, it means that my analysis is clearly wrong, and therefore I need to get out of the trade. That's how you determine your stop loss, is by showing where your analysis would be wrong. You don't do it on average volatility or any of these other metrics. You basically put your stop loss at the point where your analysis is proven wrong, and then you determine the risk to reward factor from there. For me, the reward side of it was I was expecting us to hit some resistance right here around $108. So I want to set my stop loss just below that at 106. So that is the analysis that I posted in my Discord chat, but that only gives you kind of a small picture. So we're going to zoom out a little bit and show you kind of the big chart here that goes back to a year and a half. And this one's important because this is where everything starts. If you're going to be a swing trader, you need to look at the big picture and then zoom in. If you're going to evaluate a stock, you should be looking at the 5-year or at least the 2-year time frame, and then narrow your way into 1 year to 6 months to 3 months, and then maybe a couple of weeks at the very narrowest if you're swing trading. So here's what the big picture looks like. This is maybe a year and a half or 2 years for Google. And as you can see, we are in a very clear bearish trend. We have a very clear resistance line that I've drawn here with this white line right here that is connecting the high points on the stock chart, and it is going in a downwards connection direction. It is going in a bearish direction, and it is a very clear level of resistance. What is exciting about what has happened with Google recently is that it has broken out of that level of resistance, and that is the first sign of a trend change. We have also had 3 consecutive higher lows. The first one being right here at $83, the next one right here at maybe $85 at the beginning of 2023, and then the last one most recently right here around $90 over the few days leading up to March 3rd. And so this is what the stock chart looked like from the big picture. We also had established a higher high. What I mean by that is this stock price got up to almost $110 right here, whereas the previous high was $101. So the most recent high on that stock chart was higher, and we had 3 consecutively higher lows. Those are all very positive signs of a change in trend, and therefore means I'm probably interested in it, and there's an opportunity to go long. And so now you need to zoom in a little bit. Now I'm looking at a 3 to 6 month time frame here, and I'm zooming in to really try and find my entry point, and luckily we found one. And so here's what goes through my head. I'm looking at the stock chart here, and I go, okay, we've clearly broken out of this trend change here. Here's that new high at 108. Now we're going to see a pullback at some point. Where do I want to get into this stock? And when I saw this high at 108, we started to pull back here. I said, okay, this is going to possibly turn into kind of a support level or a channel that we're going to be trading off of. And so if we come all the way back down to this $85 to $90 range and we start to bounce off, that could be confirmation of a bounce off of support, and that would be a great entry point for me. And so what I did was I waited for the stock to come all the way back down to $90 here. I think it even hit $89. And then we saw 4 green days and then a strong green move higher. So we saw 5 green candles in a row. We also saw the MACD crossover. We saw the market doing extremely well, and we saw a very clear bounce off of support. These 2 strong green candles right here are the 2 large green candles right here, where we opened and we closed and we didn't come back down. There wasn't like a huge wick on the top. We closed very close to the high of the day, which is a very strong sign. And so we saw very positive signs on the long term. We saw very positive signs on the short term, and we found our entry point right here. And this is what my trade or my orders actually looked like. So the orders that executed, I executed a buy order at $93.72. So that was my entry point right here. I then set my stop loss $6 below that at $87.72. You can see that order right here, this second one that eventually got canceled, because as you can see, my take profit got hit at $106 for a profit of $12.28. That means that on this trade here, my profit was $12.28 per share, and the amount that I was willing to risk was $6 per share. And that gives me a risk to return ratio of 1-to-2. This is the important factor here. You never want to be risking more than you have the opportunity to make, and you kind of ideally want it to be at least a certain level or a threshold before you even consider the trade. For me, that threshold is 1.5, but I usually like to get to at least 2, if not 3. And so for me, this was kind of that medium risk trade that eventually worked out really well, because here is what the final chart looked like. So as you can see, it's got these green arrows right here. So this was my entry point right here. Now what's interesting about this is that the stock actually went up for about 2 days here, and then it actually came down and tested $90. But I didn't get flushed out of the trade because my stop loss was at like 87 something. And so because I had a good stop loss on there, I gave myself enough room, and my technical analysis did not break down. That support level held up. We ended up bouncing off of support, and we went all the way up to my take profit level at 106. And so far, it looks like it was actually a really good trade, because even a day later, as I'm filming this, the stock has not gone above the highs of yesterday. And so for a short-term trade, a short-term swing trade with a very clear risk-to-reward ratio, this one was basically executed perfectly, or at least it just worked out to plan. It could have just as likely or just as easily gone the other way, and I could have lost $6 per share. But you know what? If you are getting good at this and you run enough numbers and you can understand that my risk to return ratio is 2-to-1, so I only need to be profitable actually 33% of the time to make money, well, that's part of day trading. And if you want to learn more about that, you can check out my free course on Skillshare. 10 hours long, and it has everything you need to know in order to get started swing trading. Once you're done with that, you can join the Discord chat. That's where I post all of my analysis, my research, my trades, and you can basically join a community of traders. It's basically where I do this on a daily basis, which is kind of cool. So if you're interested in either of those two resources, the links are down below in the description to this video. That is it for this one though. I hope you learned something. If you did, please consider leaving a comment, hit that like button, and subscribe to the channel, and we'll see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.